We have on the show today an expert on silver. David Morgan is the editor of the Morgan Report, and he is here to talk about the macro outlook for not just silver, but other key commodities that you need to be following right now. David, welcome back to the show. Always a pleasure to have you here on Kitco.
Well, it's always a pleasure to be with you. Thank you.
All right, let's talk about a broad overview of all commodities, not just silver. So, as you know, inflation has hit a multi-year high, or multi-decade high rather, of 9.1%. But then the last report that came out not too long ago was 8.5. So a slight fall in headline CPI right there. Now, the commodities prices have been falling in tandem with that report. In fact, some analysts have speculated that the reason we had a lower CPI in the last CPI report was because commodities have been falling. Most commodities, most hard assets have peaked around May, and like lumber, copper, a lot of other base metals, they've been falling ever since then. Food prices have also been falling. Is this a trend that you think will likely continue, David, as we head into a global slowdown? Do you think commodity prices will continue to soften?
I do, and that's great insights, and thanks. I'll just going to add on to that a bit. First of all, the trend will continue. Secondly, we are seeing a contraction globally, which means we're going to see less need for copper, lead, zinc, the base metals. Every base metal is off this year except I think tin and one other, I think nickel. And all the rest of the base metals across the board are off somewhere around 30% in some cases. I just did that on my weekly blog. The metals are a unique set because they represent money or financial stability. So you could have gold and silver, perhaps platinum, palladium, making moves higher while the copper, lead, zinc, base metal complex falls off. And that's what I expect going forward. On the other parts of the commodity sector, oil's been weak relatively from what it's been. However, the agricultural commodities are in dire straits. We've had all kinds of problems throughout the globe with locusts, weather problems, too wet to plant, too dry to plant, all kinds of reasons that the foodstuffs globally are hurting. And that's not going away. That trend will remain for probably the next couple of years. There's also, if you want to get into it, the climate change less Maunder minimum, what goes on in these solar cycles. I don't want to go too deep. The point is that stuff we need, food and energy, is probably going to continue higher. And then on the silver side, I'll have to interject there. I get often asked, what about silver and what's happening with a slowing economy and an increase in cost, because oil is directly related to mining. In some cases, 25% of the costs are due to like diesel. Well, that could be higher, but it's going to curtail the base metals, like I just said. So since 70% of silver is a result of base metal mining, if that is down and down noticeably, that takes a great deal of silver supply off of the market. And that's what I actually expect. Is it going to be like huge? I don't know. I don't think it's going to be huge. I think it's going to be measurable. And I think we're going to have, even though we might have better production from primary silver mines, the overall will be less because we're dropping, contracting, and seeing lower living standards going forward, probably for the next few years.
Sorry, just to clarify, you're saying that rising energy costs are going to restrict silver production and limit, am I understanding that right?
Yeah, there's a limit to everything. And if the costs are too high, the input costs for mining in general, it could cut back. In other words, for example, take like a Pan American that has several mines around the world. There's some mines that are very marginal, and they'll just shut them down and put them on maintenance and quit mining out of them because the cost level for that particular mine is not economically effective.
That's a very interesting perspective. Everyone's talking about silver rising from an ESG perspective. You got the greenification of the economy needing silver for a lot of industrial applications, which we'll talk about now or later on in the interview. But you're saying that more immediately a supply shortage is going to push up silver prices. Is it going to have a significant impact, actually, David, on the price of silver, or not at all? Well, you just talked about it.
Yeah, well, it could. I mean, I'm forecasting what's going on in the global economy. I think I'm pretty accurate at it. There's a lag. But markets usually forecast the future. So if I'm correct, and believe I am, you could see a push in silver prices because of lack of base metal mining and higher costs. So some mines will become inefficient and not economically viable. And so that will cut the supply on the primary silver miners and on the base metal miners, which means kind of a double whammy. I don't want to build too strong a case here, but it is in the cards. In fact, I did in the Morgan report a few months back, I got a question from one of our members, what's going to happen? And that was when oil was spiking, right? And what will it do? And we did the whole editorial was about the best, most effective use of money when you're in the mining sector and why you wanted to follow our advice in that sector. I won't spill the beans because I'm paid for my research, but there is a certain segment in the mining space that's much more effective and not nearly as tied to energy costs than, let's say, straight up mining.
Mm-hmm. All right. Which regions you think in the world will be most affected by rising energy costs and hamper their production? Would it be mines in North America, South America, perhaps mines in Africa? Is it dependent on the region or not at all?
Somewhat it is. It depends on their input costs. I mean, if your, input costs are less than another nation state, the real situation with the geographical location is what are the implications for labor and what are the implications for environmental protection. So if you are in, let's say, South America, in many instances, there's really not strict labor laws like there are in the US and Canada, where you've got to provide, healthcare coverage and, insurance on the employees and all this stuff. Those costs, to a large extent, don't exist. Also, on the environmental side, although it's pretty pervasive throughout the world, most places you need to do some kind of an environmental study before you start mining. But some places are very lax and other places are very strict. That adds to cost. So obviously, in areas that are more favorable labor-wise and environmental-wise, have lower costs, even if diesel costs the same everywhere, because their input costs are obviously less. And this is something that's not really discussed in the mining industry that much. But part of the reason that almost all of the rare earth elements come out of China isn't because China is blessed with a lot of REE.
Sure.
It's because it's so toxic and cost ineffective to do it in an environmentally friendly way. They just look the other way and let China process it in a very unenvironmentally friendly way and ship it back to us.
Some gold miners, not silver miners, but some gold miners have told me that energy costs are a relatively small percentage of their total costs. For example, Yamana, they claim that 5% of their total costs come from oil and gas that go into their trucks and drillers and whatnot. I'm just wondering if that's different for silver miners, whether or not energy costs are a large percentage of their operating costs, David.
It depends on the mine. I mean, if
Sure.
you're in like a large open pit and you've got these huge tractors, I mean, these things are so huge. I don't know if you've ever seen one live. I know you've seen it on, a documentary, but I mean, you can stand next to the tire and they'd have to put three of me on top of each other just for the size of the tire.
Okay.
Those are basically driven, diesel machines that are very, very costly on the price of diesel, because that's an open pit. On an underground hard rock mine, you got a different dynamic and it wouldn't be as costly. So it really depends on what you're mining, where you're mining, and how you're mining.
I'm just curious, going back to your statement about rising energy costs, I'm just curious as to why you think energy costs will rise, given that currently some would say that we're already in a recession. Do you normally during a recession you would foresee demand for energy go down? No, is this time different?
Correct. No, you're correct. But it is supply and demand, and we're at or maybe just past the energy cliff. I'm a big believer in the peak oil situation. What we're seeing is inefficiencies in the fracking sector. Really, there's very few places that fracking makes sense from an economic standpoint. And then you're seeing depletion that is taking place rapidly through different parts of the world. Behind me in this bookcase is Twilight in the Desert, written by Matt Simmons years ago, talking about Ghawar, the biggest oil field in the world, and how it's being depleted, and that the amount of oil or the flow rate is so much less than it was initially. So I think that it's going to be the supply that is going to be the driving factor, even though demand's going down noticeably. I think the supply will be going down at a higher rate. And that means what I just said, higher oil prices.
Mm-hmm. Analysis. Well, let's talk about the demand side for silver then. I keep hearing that, there's going to be a surge in silver demand over the next 10 to 15 years from a variety of industrial usages. Do you agree with this statement, first and foremost? And what are these industrial applications that need so much silver?
Yes, I'll answer that. I just want to thank you publicly, David, for having Matt Watson on. I know that you interviewed him. A lot of the forward-looking statements I'm making right now come from Matt's work. I consider him, friend. He certainly picked up the phone every time I've called him. So there's a lot going with the photovoltaics. Take Germany, for example. They're the leader in solar in the European area. And now with what's going on with the natural gas market in Russia, they're probably more inclined. There's a lot of legislation through different jurisdictions. For example, California, any new home that's built has to employ solar. Doesn't have to employ it 100%, but it has to use it. So when you looked at a pie chart of silver's usage, they never broke out solar until about 2019, so 3 years ago. And the Silver Institute put on their pie chart that the solar usage in 2019 was about 9% of the solar industry, okay? And now it's probably around 12. And that's going to continue to increase. So that's the main driver. A lot of people make a big deal about electrical vehicles and that electric vehicles use more silver, and that's true, but it's not as substantive as many make it out to be, but it certainly will be additive. Another one is the semiconductor industry, which most people don't talk about. Semiconductors take 44 million ounces of silver on an annual basis. And I've jokingly said with my tinfoil hat, David, that I wonder why they're having trouble with semiconductors. Could it be silver? I have to digress a bit and try to throw a little humor in here, but you may recall, David, that there was a statement made by the U.S. Mint that there was a worldwide silver shortage. And that came from the mint master of the U.S. Mint. And he quickly retracted that statement. And I don't think there is a worldwide silver shortage. It's just, if you look at what the mint is producing now, they're not able to keep up with demand whatsoever. And the margins, what makes a market. Okay. And the mandate for the mint is to produce as much silver eagles as the country demands or the market demands, and they're not.
Well, let's explore that a little bit here. We don't have to go as far as to put on tinfoil hats, but that statement that the mint master made was quite interesting. Why do you think he retracted that right away? Was it a mistake?
I think it probably was. I think what he was actually referring to is it was harder for them to source what's called blanks or planchettes in the industry, and they just weren't getting enough, smooth metal that they stamp into an eagle. I think that's what he was actually referring to. But when it said worldwide silver shortage, believe me, it got the silver community really, really wound up.
Well, speaking of silver shortage, I recall the Matt Watson interview that I did. You're right, he is very knowledgeable, and I believe that he said that in about 20 years or so, we will run out of silver if we assume that there will not be enough silver in above ground reserves, I think is what he said, to service the amount of silver that should, in theory, be needed to produce everything that we need to produce: solar panels, electric vehicles, and so on. I mean, that's not. We're not talking about, of course, mints and coins. We're talking about industrial usage of silver. Not enough silver being in reserves around the world to service our demand. Is that a concern that you have, David?
Absolutely, and it was actually first stated by the USGS, United States Geological Survey. They basically said that silver would be the first element to leave on the periodic table that will be in such short supply. And that was a few years back. And based on Matt's work and my own, others, I take a lot of input. Just the industrial side alone is probably going to take, as you outlined, all the silver available at some point in time, and that's off in the future. I would say this, as far as a long-term investment or a legacy investment, if you're in your 20s or 30s and you've got, a new family and you want to put your son or daughter through college, I would commit some to the silver market, because I think if you got a long time horizon, like 10 years or more, I can't think of something that's more that would be better than a silver investment. You don't have to go whole hog or buy too much, but certainly the legacy type of investment going from generation to generation, I think silver will shine at some point, probably beyond what anyone thinks. But it's probably going to take what I call a natural corner. How do you corner the silver market? Well, you buy up all the silver that's available. And of course, that's been tried by the Hunt brothers and it's been tried in the past. But that isn't necessary. A natural corner is when industry alone sucks up all the silver that's available and there isn't any left. And that's an extreme. I'm not saying that's exactly what's going to happen, but that's a general trend. And I think we need to pay attention to it, especially if you are a silver investor holding silver in, let's say, long-term storage, because you expect the price to increase over time.
Hypothetically, David, let's suppose we run out of silver. Just extreme example. Is there a substitute for silver that could replace this metal with the exact same industrial application?
I love the way you think, and that's an excellent question. Yes and no. The real answer is no. Nothing conducts light as well as silver. Nothing conducts electricity as well as silver. Nothing conducts heat as well as silver. However, the graphene space is pretty close on electrical conductivity. However, it's uneconomic compared to what silver costs. So in other words, when you're doing, nanotubules to build, exotic electronics, it's just as costlier than silver would be. But yes, there's that possibility. But overall, no. And it's really, I'll elaborate somewhat, it's price inelastic on the demand side. And the reason is most silver applications are absolutely essential and irreplaceable. There is no substitute. But it's such a small amount that it doesn't matter what the price of silver is. So for an example, if you're looking at a cell phone that has gold and silver in it, the silver might only be worth 50 cents. And so if silver went up tenfold, it would be $5. But $5 for a $1,000 cell phone is almost meaningless. So, the manufacturer might pass it on, but really there's nothing to pass on because such little is used in refrigerators, washing machines, most of your electronics, your membrane switches, your flat screen TVs, everything that silver is using is such a small amount relative to the output cost of the overall thing. I mean, the amount of silver in a solar panel is relatively small relative to what a solar panel costs.
Yes. Okay, so given that it's reasonable to assume that silver might run out or be close to being depleted, I'm not saying it will be completed, but let's say that there will be a shortage of silver at some point in the future. What is the solution then to this long-term problem?
Well, there would have to be substitution, or you just don't, use it, and it's not available. I mean, you can't, produce something out of thin air. So I think, and the solar industry has been thrifted. That's the word they like to use, which means the production's become more efficient. So the solar panel today that produces X kilowatts takes 25% of the amount of silver it took 20 years ago. So the efficiencies in solar panel have come way up as far as the amount of silver used for a given output. Will we be able to duplicate that in the next 20 years? I doubt it. I think we're pretty close to our limit right now. But again, what goes on in the nano world, we could see, the graphene space come into fore, or just basically take certain things out. The market will determine, what's more important for, the silver available. And of course, that already, but it would be, semiconductors take precedence over silverware, right? Mm-hmm. Silver, no more silverware is allowed. That's only 6% of the market. Right. Silver jewelry. You got to be really rich to buy silver jewelry. It costs more than gold. I'm joking, but that type of thing. So there are two areas that could be squeezed down significantly, and that would be jewelry and silverware.
I'm wondering why in your solutions you didn't propose the government spending a lot of money, we're investing a lot of money to basically explore or mine for more silver. The Biden administration has recently, of course, as you might be aware, invested billions of dollars in mining uranium or exploring for uranium domestically, so we don't have to be as reliant on foreign sources of uranium like from Kazakhstan or Russia. Why is this not a long-term solution for silver?
Yeah, that's a great question. It's debatable. First of all, the environmental laws are pretty strict in the United States, although certainly there's a lot of mining in Nevada. It's pretty easy to do a silver mine, a gold mine, any type of mine in Nevada. Other states, you almost, no matter what you discover, you wouldn't be allowed to mine it. But what's interesting about that question is that the Silver Eagle program, going back to the Mint, when it was first enacted in the law, the requirement was that all the eagles had to come from domestically produced silver. So it had to be a mine in the United States that produced silver, and that silver would be used in the Silver Eagle program. Well, they had to nix that right away because within a few years, the demand for silver was greater than the combined all the mining available for silver in the United States. So there's not a lot of silver that comes out of the U.S. relative to the rest of the world. Mexico, Peru, China, they're much larger producers in the United States. Now, back to your question, could we mandate, a big idea of getting more silver in the States? And the answer is yes. How much is left? Hard to say. I mean, the great silver rush through Nevada, the Comstock lode, in Colorado, which was huge. Are they mined out? No. But I don't think there's a lot left in the US of A. I think most of what's available that I'm aware of, and of course that's one of my areas that I dive deep, is Mexico.
Okay.
There's still a lot of deposits in Mexico that are substantial.
Maybe in space, David. Maybe asteroids. Maybe on the moon. Maybe not in our lifetimes. We'll see. All right. Well, finally, I want to ask you about how you think silver might perform during this financial correction, recession, however you want to define it. Certainly, the administration of the White House is a little bit uncertain as to how to define this current downturn. But let's call it a recession for argument's sake.
Sure. Yeah, I think it's going to do well. The reason I say that with some authority is I did a bit of a deep dive on a recent talk I gave. And what I discovered was a seasonality during midterm elections. And during that was very strong seasonality that gold goes up from July to the end of the year. So 7 straight months, 6, 7 months. Straight up meaning, 45-degree angle. So silver's 80% correlated to gold, which implies, both the metals will do good over the next several months. I think the uncertainty factor of what's going on politically worldwide, with a lot of citizenry, wherever they are, being disgusted with their political class, and people, when they tend to be concerned about the politics of their area, tend to run to gold for stability. And I think that will continue. So I'm actually thinking that, gold and silver can do well even in a recession, especially if the recession takes down the production that we talked about already earlier in the program.
All right. So then gold and silver ratio, then do you see a compression in the ratio, or do you think gold's going to outperform silver?
Well, gold has, depends what time frame we're talking about. I mean, in the 2008 crisis, when they both got hammered, silver went from the bottom and went up over 5-fold, and gold did a little better than a double. So silver far outperformed gold in the last major crisis. Will it do it the next time? I believe it probably will in the long term, but in the short term, I think gold's pretty much pulling silver up. Silver started to close the gold-silver ratio somewhat. I think if you have a long-term perspective and you're like a gold-only person and you want to buy gold cheap, put your money into silver and wait for a couple of years, and you could trade that 85-to-1 ratio at 40-to-1 and own almost twice as much gold as you would have if you bought gold directly.
All right. David, I appreciate your insights. It's always good to hear from you, and thank you so much for sharing your research with us.
My pleasure. Thank you.
And thank you for watching Kitco News. I'm David Lin. Stay tuned for more, and don't forget to subscribe to our YouTube channel.